Hello guys. Today we will speak about the top 5 dividend stocks to buy in 2022. Not knowing how to live off dividends can be a problem for many people. In this video, I will show you not only what it means to live off dividends, but will also tell you the best way to make the most out of your money. I will go through the definitions, pros and cons of living off dividends, and finally, I will show you how to create a passive income stream with dividend investing. Before we start, please like and subscribe to my channel. First of all, we need to ask the question, what is a dividend stock? Dividends are a cash reward for shareholders. When the company earns profits, it pays out some of the money to shareholders in the form of a dividend. You may have heard about the stocks and shares, but what are the dividends? A dividend is a cash reward for shareholders. When a company earns profits, it pays out some of the money to shareholders in a form of dividends. Dividends are often paid quarterly or annually. Dividend stocks are an investment vehicle from growth and income. They provide you with both. They can be a great way to get started investing because they are typically pay high yields and you don't need to spend much time on reach since there are many companies that offer them. A dividend is paid per share of stock. So if you own 30 shares in a company and the company pays you $2 in annual cash dividends, you will receive $60 per year. We also need to clarify what are the dividend yields to understand what we will talk about in the next couple of minutes. So the dividend yields or dividend price ratio of a share is the dividend per share. Dividend by price per share. It is also a company's total annual dividend payments, dividend by its market capitalization, assuming the number of the shares in constant. It is often expressed as a percentage. As a little teaser, I would like to show you the roughly 422 of 500 stocks of the S&P 500 pay a dividend, including companies like McDonald's, Walmart, Chevron, and 3M. And how powerful the dividends could be when we reinvest the money that we get from the dividend. For example, from Coca-Cola from 1922 till 2021. How to live off dividends, passive income strategies, and building a dividend income portfolio. The idea of living off dividends, passive income strategies, and building a dividend income portfolio is not a new one. For decades, investors have been seeking ways to generate an income that does not depend on their time and labor. This section will explore the benefits of living off dividends, passive income strategies, and building a dividend income portfolio. It will also provide some tips for how to do it successfully. So, what are the benefits? Dividends are typically taxed at a lower rate than other types of income, such as interest, rental income, and or wages. The tax brackets for dividends and long-term capital gains are 15 and 20%, respectively. However, it is important to note that the dividend income is not exempt from prior taxes, meaning social security and medical care taxes are still withheld on dividends as normal. In a general, the lower tax rate for dividends helps increase the overall return of a dividend portfolio over time. Of course, if you would like to be more, consult a tax expert. Second, dividends are generally more stable than other types of income because they can be reinvested into assets that provides regular cash flow and pay out quarterly or annually, such as stocks and bonds. If your company made a profit in June, You can expect the dividend payment to be paid out by the beginning of July. There is also some degree of protection from inflation in the dividend payments because they are usually paid out quarterly or annually. Third, dividends are not taxed. Until dividends are withdrawn from the portfolio, the spend or saved for a specific purpose, for example, retirement. Let's talk about the dividend aristocrats. The dividend aristocrats are the mix of 65 stocks in the S&P 500 index. These companies are growing their dividends per share a long period of time. In this Google Sheets, I imported the whole stocks from the dividend aristocrats, and I also choose my top 5 of them. You can also create your dividend portfolio in Google Sheets. For the tutorial, you can watch my tutorial about how to make a dividend list with Google Sheets. But if you would like to save some time, you can also download this sheet. Every link is in the description box below in this video. A dividend portfolio is a great way to create passive income. Dividends are payments made by a company to its shareholders, usually as a result of a profit or a liquid asset. The idea behind the portfolio is that you will be able to live off dividends and not have to work for your income. Top 5 dividend stocks. We will go over some of the benefits of having a dividend portfolio and some of my strategies for building one. We will also discuss some pitfalls that you should avoid when trying to build a dividend portfolio. What are the 5 best dividend stocks of 2022? The video will be looking at 5 stocks which have a high dividend yield and are expected to increase their dividends by 2022. The first stock is Tnt Inc. The company's dividend yield is 4.2%. It has increased its dividends for 25 consecutive years and expected to grow them in the future as well. Next is 3M Corporation, 3MM. The company's dividend yield is 2.8%. It has increased its dividends for 57 consecutive years, and it is expected that it will continue to do it so as for the future as well. Next is United Technology Corporation. The company's dividend yield is 2.8%. It has increased in the dividends for 37 consecutive years and expected that it will continue to do so for the future as well. Next is Exomobile Corporation. The company's dividend yield is 2.7%, and it has increased its dividends for 47 consecutive years, and it's expected that it will continue to do this for you as well. Next is the General Electric Corporation. The company's dividend yield is 20.5%. It has increased its dividends for 40 consecutive years and expected that it will continue to do so in the future as well. The dividend income strategy. The dividend income strategy is basically based on of the most loved income strategy. So you can implement it if you would like to make monthly income with dividends. How it works. The purpose of this strategy is to generate an income stream for an investor. The investor buying and holding stable dividend stock to generate this monthly income. The best way to do it that you find frequently buying and selling shares. If you buy one of these shares, you should hold it just a short period of time and wait till the dividend stock pays. Sometimes this kind of transaction can be opened and closed in one day. So in this case, you should calculate with a higher risk. For the better understanding, let's just look on this timeline. And let's just talk about first about the declaration day. On this day, declare the company the dividend. That means on this, the company announced the amount of the dividend payment. As an example, with PepsiCo, this would be on the 2012 of 21. And they say that they pay 1.075 per US dollar per share. The next one is the ex-dividend day. So we need to define also this day. So the traders must buy the stock before this day. Anyway, they don't get the dividend. So if you want to earn the dividend on this stock, you must buy it between the day of a declaration day and the X date. So in this case, between 2012, 21 and 1st of February 22, if you watch the price at December 21, was the price of the stock 148.96 US dollar and on the X day. So it was on the X day. Look at the chart, the PepsiCo share just suddenly dropped. So you buy the dividend before it goes ex-dividend, and you sell it after a few days from its ex-dividend date. After a payoff, the company's stocks automatically will be lowered because a big amount of cash goes out from the company. But the thing is that Pepsi company is a good quality stock, and because of this situation, the price will drop. But these kind of stocks will be recovering pretty quick. So after a few days later, these stocks typically go back to the previous price. Date of record. On these 2 days, record the company to shareholders who are holding dividends and who get the dividends payout. Payday. After the date of records comes the payday. Here will be focus the price of a stock pretty low. So I wouldn't sell this time the stock. I would wait 1 or 2 weeks after the dividend payment. So you can make more money with this transaction. Capture the dividend means strategy is that you are buying the stock when it goes ex-dividend. In this case, you bought the Pepsi company stock on the next day of the ex-dividend day. So in this case, on 2nd February 2022. But what's happening in this case? In this case, as we already saw, the dividend stock must be full. That means it's pretty low on that time. You don't have to hold the stock after the payday. On a real world example, on 19th December 21, the shares of the PepsiCo company was traded on $148.1. After 1 day, on the declaration day, the bosses of the company declared an amount of 1.075 US dollar payout per share. So after this amount announcement, the stock price is jumped. And you sell it before the X date. So you make a profit on a point. Or you could say easy, wait till end of the dividend payday, get the 1.075 US dollar profit per share, and sell it after a few days after dividend payday. I hope you learned a lot about the stock dividends and the top 5 dividend stocks in this video. And if you liked it, please like and subscribe to my channel, and see you later.